and sports shop on London's Oxford Street early this morning as clothing and other non-essential retailers opened their doors for the first time in more than 3 months. Juliana is here to give us update. Good afternoon, Juliana, and welcome to the show. Well, how are the markets trading? How are the markets trading the busy streets of London as the government eases off COVID-19 restrictions?
Well, despite those long queues, which I just witnessed a couple of moments ago myself, there's not much to cheer about on the FTSE today. It started off in a subdued mode and it's still in the red at intraday. I heard you talking about COVID with Chelsea and Frankfurt, and it does appear as if COVID-19 has crept back into the anxiety of investors across the world. There was some data released by the Johns Hopkins University showing in the week to April 9th, there were over 4 million new cases of COVID, positive COVID tests across the world. This is one of the biggest jumps that they've seen in about 5 months. So that's particularly worrying. We know that second and third waves are creeping across the globe, even though we do have some successful vaccination programs being doled out. More domestically, though, here in London, it's the travel and leisure stocks that are really weighing on the FTSE at the moment. EasyJet, the budget airline, their shares were down about 2.5%. Wizz Air, their shares were down 2.7%. And this is as airline bosses are still mulling over last week's announcement by the government that they will indeed replace the May 17th international travel ban with this travel traffic light system. Some people think that that's going to make travel completely inaccessible for those who can't afford it. So let's have a look at the numbers. The FTSE All Share is down 0.25%. The FTSE 100 is down by 0.30%. And the FTSE 250, that's down by 0.19%. In the currencies market, the British pound is rallying against the US dollar by 0.30%, up on the euro by 0.21%, but down on the Japanese yen by 0.05% at intraday.
All right, well, EY says London Stock Exchange has the best first quarter for IPOs since 2007. Despite Deliveroo Dam Squib, the market raised more than £5 billion in the first 3 months of 2021. Can it then be said that London remains the place in Europe for private companies to go public?
Absolutely. According to this latest data by the financial firm, London still is the key destination in Europe. This is a massive boost to Prime Minister Boris Johnson and the Square Mile. And of course, Chancellor Rishi Sunak, who in his spring budget on March the 3rd did try and modernise the FTSE All Share just to make it more competitive to the likes that we're seeing on the New York Stock Exchange. So, for example, now you can have those dual share listings, which still gives CEOs the power to control their company, even though it has gone public. So this is the biggest quarter that the London Stock Exchange has had in 14 years. And if you compare the 5.6 billion raised this year to last year, they only raised about 680 million pounds, and they had 2 IPOs, whereas this time we've had more than 12 IPOs. There are more IPOs coming. I know we're going to talk about Dark Trace, but another one lots of investors are looking forward to is the public IPO of the EG Group. Now, the EG Group is owned by the brothers who recently took over Asda from Walmart. They own a series of petrol stations and food outlets across Britain. And if they are indeed going to float, that valuation could be £10 billion. So, yes, great day for London.
Well, in the meantime, the cybersecurity firm Dark Trace has announced plans to float on the London Exchange in a move that will reportedly value the Cambridge-based company £3 billion. Tell us more about this.
Yeah, again, this is another great story for London, who really are trying to, emerge as being a thriving hub for tech companies, only second to Silicon Valley in the west coast of America. Dark Trace, like a series of tech firms over the past 12 months, they've been doing particularly well in cybersecurity. They use artificial intelligence to track any misgivings on one's computer. This morning, they released their latest trade report, which shows that over the past 12 months, they've made $200 million. And now the CEO of the company believes that they are sitting on potentially $14 billion of a year worth of business, which is why they've said that they are going to be floating in London. And I believe that it's actually more than $3 billion. I think they're mulling over about a £3.6 billion float. So again, another great story for the Square Mile, Innie.
Well, great stories today, Juliana. Well, thank you so much, and take care. Well, we're moving now to